traders, this is Blake Morrow, and you're listening to the Week Ahead video for January 27th, 2019. Hope you guys and gals are having a great weekend. Now, before I get started on the charts and talking about the events that are happening next week, I need to mention, if you haven't tried out ForexAnalytix, it's only $1 for 10 days. So make sure you try it out. And then once you do that, download the mobile app. It's nice because if you're sitting at home, I mean, we're not all sitting in front of our computers all the time. So if you're on the road and you're traveling and you want to get all of our notifications, this is the best way to do it. So make sure you download either the app from the Google Play Store or from the Apple iTunes Store. And yeah, like I said, try us out. It's only $1 for 10 days. Do it. All right, now let's talk about the week ahead. So next week is a pretty important week, and the reason why I say that is because we have, I consider two major events next week. The first one on Wednesday, we're going to have the FOMC meeting, so that's number one. All right, the FOMC meeting is going to be really important, and then on Friday we have the jobs report, which I'm not going to scroll all the way through there, but we have the jobs report on Friday. So two pretty key events going into the next week. There are obviously other events happening. We have like Australian CPI on Tuesday. We have consumer confidence here in the US on Tuesday. We also have some Eurozone GDP numbers, which obviously with the recent slowdown in Europe, all the weakening data, GDP is going to be really important on Thursday. And then we have PCE here in the US. We have Canadian GDP on Thursday, and then on Friday we obviously will have the jobs report, only in the US, not in Canada, not this week. So let's talk about the reversal that we saw at the end of last week. That was pretty key, and if you guys or gals are short, or excuse me, long dollars, I'm sure you're a little worried about the reversal that we saw on Friday. I mean, I would be, and I don't have any dollar positions going into this next week currently. But the euro dollar looked pretty weak on Thursday, and then we reversed pretty aggressively on Friday, right back into the channel. So we had this little false breakdown below the channel. I knew a lot of traders that were actually short the euro going into Thursday, and they got up Friday morning and said, "Oh man, what the heck?" And we saw this major reversal. And my assumption would be that the dollar continues to weaken going into the FOMC based on the reversal pattern that we saw on Friday. So my assumption is going to be that we're probably going to trade back up towards 115. And if you look at the cable, I mean, this is one of the strongest rallies we've seen in the cable in quite some time, and we're well above the 200-day moving average. We have this nice little upward sloping channel in the pound. A lot of people believe that the pound might be getting ahead of itself. Now, on Tuesday, I believe Theresa May is bringing the Cooper Amendment to Parliament to try to extend Article 50 a little bit. So we're going to have to see how the cable responds on Tuesday. I think while we're above the 200-day moving average or above 130, I think dips are going to be bought. And obviously, if we break back below 130, that's going to be a pretty bearish event for the pound. And I was trading the pound to the long side, you know, last week as we broke above 130. It treated me really well for a change. And for those of you that know me, know that sometimes I have some challenging times trading the pound from time to time. But I actually ended up making money last week, which was, like I said, a bit of a surprise. But technically, it was set up great. Now, what you do with it from here is a little bit questionable. And like I said, as long as we stay above 130, I think dips are going to be bought. We get back below 130, that's not going to be a bullish sign for the pound. But that's not what I'm really paying attention to this week. What I'm really paying attention to is I'm going to show you before I show you these charts on ForexAnalytix. I'm going to take you to the S&P the way I have it drawn out, because I think this is really important. We talked about the same chart probably on the last week ahead video. I'd have to go back and listen to it, but I know I've talked about this chart quite a bit. This is the S&P, and if you look at this green trend line, that's a trend line that's been established since 2016. Now, this blue trend line, you're probably like, well, look at that one. Well, that's from like the financial crisis lows. All right, so if you look at post financial crisis lows. That is where we pivoted off of this month, right? At our lows in January, or I guess that was the lows in December, right? Yeah, I guess that was the lows in December, and then we reversed. Okay, so obviously that's really key support, but I'm not worried about that right now. What I'm more worried about is us challenging the underside of this green trend line, and you'll notice there's a 618 retracement, which is a key fib level for me, underside of this trend line. And really, while we're below this 2660 to 2700, I'm a little skeptical about being long risk. We are coming into the end of the month. There's probably going to be some portfolio rebalancing going on for the next few days in the markets. So what the S&P does from here is probably going to drive a lot of what I do in some of the yen pairs. So let's talk about the dollar yen really quick. The dollar yen, you'll notice that we're stalling at 110. I'm bullish if we get above 110, but the S&P also has to be above 2660 or 2700 in order for me to be bullish the dollar yen. While we're below 110, I'm more apt to be on the short side of the dollar yen here. Okay, but it's not just the dollar yen that I'm looking at. I'm also looking at the euro yen and the Aussie yen. So let's go over to the euro yen. Let's go over the daily chart here. You'll notice that we're struggling with this 125 level. It's previous support. That's current resistance, current resistance, current resistance. We pushed above 125 on Friday, just tripped some stops. I think we rallied to 125.30 if I'm not mistaken late in the session. And then we closed back below 125. While the S&P is below 2660 to 2700, I'm more apt to be on the short side of the euro yen. However, because the euro dollar had such a strong close on Friday, makes it a little tricky. What I'll probably be doing is watching the euro yen going into Sunday, Monday, versus just stepping into a trade, seeing how the S&P is trading, seeing where the euro yen, how much of a rally it gets from here. But it's gonna be key resistance. But also, it's not just the euro yen, it's also the Aussie yen. Look at the Aussie yen here, which is a great barometer of risk appetite, right? So the Aussie yen is really struggling at 79 yen. That's also previous support, current resistance, really struggling here. Again, if the S&P is below 2660 to 2700, I'm more apt to look at Aussie yen as being a short. But if the S&P does break out and we break this big resistance zone here, something like this, which I think could happen, we break above that, then I'm going to be shifting to more of a long bias on the Aussie yen, euro yen, dollar yen too. So those are really the things that I'm watching going into this next week. I think the dollar, again, if you're long the dollar, you've got to be a little careful because of the big reversals that we saw. I mean, you saw the euro dollar, a little false breakdown here. Looks like the euro is going to head back up to 115. So again, I'm not really too sure what to do with the dollar per se going into this next week. But what I'm really going to be watching is the yen pairs and how the S&P reacts around current levels, and that's probably where my head's going to be at going into this next week. And guys and gals, if you're watching this video and you're like, man, I think this is really beneficial for me going into this next week, make sure you hit the thumbs up button, especially if you're listening on YouTube. Click the thumbs up button. Make sure you subscribe to the YouTube channel. This way you don't miss any of the great interviews that Dale Pinkert does throughout the course of the week with so many market experts, traders, people that you would see on CNBC or Bloomberg. He'll spend a half an hour with these folks, and it's all free to listen to, so you don't want to miss those interviews. So make sure you subscribe to the YouTube channel, click the thumbs up button. Makes us all feel really good here, makes us want to continue to make these videos for you. And if you listen to the Face webinar, which is free, I'll be there tomorrow morning as I normally am. So we'll catch you then. My name is Blake Morrow with ForexAnalytix. Thanks for listening in. Hope you guys have a great trading week.